Hi traders, welcome to today's video. I'm going to be talking a little bit about the NASDAQ and the US stock markets as we're starting to see a little bit of a rebound, and I wanted to discuss whether this was a sustained potential rebound or whether this was something that we were going to see sort of continue to sort of fall. Now, when I look at the NASDAQ futures market at the moment, we can see that we've obviously been in this very strong upward trend, like all US stock markets. But around the 25th of February or the 20th of February, we saw the market reach those new highs. And we just saw this catalyst of the market driving lower. And this was driven by multiple different things, largely due to a poor run of US data. We saw sort of non-farm payrolls coming in a little bit lower. We saw GDP growth, which was kind of falling at the time. But a big major driver was actually sort of retail sales and consumer sentiment in the market. They fell quite considerably. You can see the previous reading here back in February was minus 1.2%. We saw consumer confidence, which has continued to decline, was at 104.1, has now continued to decline. So in February 25th, we had the 98.3 reading as well. So we've had a lot of things like that. Now, today we've actually had a services PMI that came in at 54.3, which was a nice rebound from the previous, which came in at 51. So we've actually seen quite a significant move higher there when it comes to the idea of seeing kind of like a rebound in the markets. Also just kind of taking a look at what's going on with the difference of the 2-year yields between current interest rate expectations. So after the previous meeting with the Fed, we're now going into the 7th of May meeting. At the moment, there's an 85.7% chance that we are going to see a hold right now. Now, when I look at the difference between the 2-year yields and the current interest rates, there's still a negative 0.5% difference. So there's still a potential pricing of a 2-year, of two potential cuts for this year if we're looking at a 25 basis point cut each. So the market's still fairly interested in pricing that at the moment. Now, let's go take a look at what's going on in terms of sentiment data, which is where I'm getting a bit of an interesting reading at the moment. If I just come out of this for the moment and have a little look at this detailed view here, what I'm really looking at is this NASDAQ 100 micro, right? So you've got the E-mini, the NASDAQ E-mini, and you've got the NASDAQ 100 micro, so the micro contracts essentially. And what's quite interesting about this is that we see that they are at minus 42,178. So that is actually a new 52-week low. So potential extreme, right, coming from these contracts in here. Okay, now I'm looking at the E-mini futures, which is this one currently, but the NASDAQ 100 micro and E-minis, they move in very, very similar ways. But we're seeing that difference there, or that extreme coming from the micros. What's also quite interesting is the S&P 500 VIX futures, the volatility index futures, reaching a 52-week high, so 6,168 contracts, which was here. Now, we know the correlation between the volatility index and stocks, right? So if we go take off these here and we look at what the large speculators are doing, they have reached an extreme. The last time we reached an extreme was on the 21st of October 2024, and we saw actually volatility fell off, which is good, right? That's what we want to see if we want to be bullish stock markets. You can see we reached an extreme at this point to the upside as well back in April of 2024, and you can see what happened there. We saw a sell-off in volatility, which usually leads to a stock market rally. Are we going to get the same again? A couple of things that I like to note of is the fact that we have actually breached that 20 line now as well. Now, usually if the volatility index is below 20, the stock markets have a strong performance. If they are above 20, usually it indicates a bit of fear within the markets, and we're likely going to see a continuation of that path there. Okay, one thing we can do to just kind of compare that, I can just pop the S&P 500 index on here, and we can have a little look at when we do see the fear spike in the market, we see that kind of pullback in the S&P 500. And you can see over time recently, we've had the volatility index climb higher significantly, and the S&P 500 has come down alongside other stock markets as well. So what I'm trying to get at is here, we're at a potential extreme here on the volatility index as well. If I zoom out, we have been in kind of similar areas before, notably 2020, and we were above that in 2018 as well, where we saw this significant long, which led to downside because it's a potential reversal signal, upside in the stock market. Again, high levels here. What happened? Volatility flew off, and we saw a rally in the stock market. So there's a potential for that to happen again here. The only thing I'm looking at right now is the fact that, is this a good area to be necessarily a buyer of the stock market? You know, is this cheap enough for us to really, you know, get involved with it? Now, if we look at it from a weekly point of view, then, you know, maybe you've got this nice little upward trend that's forming here. Maybe, you know, you've come into this kind of double bottom neckline that formed back in September, and that could be an area to note, just these kind of areas there. But for me, I don't know whether it is or not. I feel like I would like to be sort of longing down towards the 18, 20, 250 kind of area. That would be where I'd be really interested in the market. But that being said, we could still see a short-term bounce. There's obviously a lot of volume being built up in this area. We can tell that because we're in that sort of consolidation period before a breakout. If I pop a volume profile on the chart, you can see there's a lot of volume being built up in that area. So there might be an opportunity to see kind of prices maybe kind of, you know, trend back up into this kind of volume zone here, and then maybe the market has a decision at that point. Do we see the sort of sellers that were active at these areas that push price beyond that? Are they still there at that point, or are we going to see kind of price reclaim that volume? I think if it does reclaim it and we get above this kind of value area low, then I think we probably are going to see some further upside to the stock market. But, you know, for now, is this going to create that kind of rebound? You know, like I said, one thing that really kind of stands out to me is this volatility index and the fact that we're coming in lower. If that continues and we stay below 20, then I think the stock market will continue this sort of minor rebound that we're getting at the moment. Now, that being said, the market is also kind of bid on the fact that there's potential for Donald Trump to not impose reciprocal tariffs at all. It's actually to impose tariffs that are only to countries that are in a surplus against the US dollar. Or against the US economy. So that is also a bit of a risk here to me as well, because you're betting on the fact that the president is not going to follow through with aggressive tariffs. And, you know, that seems a bit of a risky play to me right now. So I'm more focused on what the volatility index is doing. And at the moment, that is below 20. So I do feel like we could get a bit of a rise here. That being said, when I look at the daily chart, we're kind of pushing higher here. So looking more towards what happens here on the 4 hour, I think if we can get some moves back towards this kind of $20,000 area, maybe this 19.8 area, and then we see some kind of change of trend on a lower time frame, that could be something where we see further upside to this kind of NASDAQ market in particular. The other market I like as well, I do like the Dow as well. This actually has quite a significant long position on the commitment of trader reports as well. That has kind of reclaimed this kind of 42,000 area. So if that does also kind of trade higher, then we may see a move back towards kind of like the 43s, maybe even the 45s. But, you know, this one also had quite an aggressive drop after that kind of double top that we saw across most markets. So I wouldn't be surprised if we did see at least, you know, one more leg down before a continue higher. So just be aware of that as well. Thanks for watching the video, guys. I hope you enjoyed it. If you did, please leave it a thumbs up. Subscribe if you are new. 69% of you that watch the videos do not subscribe to the channel. So I want to try and change that. And if you could subscribe, that would be really helpful. Thanks for watching. Speak to you soon.